let's start by talking about the benchmarks, how you are expecting them to pan out based on your observations and rollovers this time.
Yeah. So good morning, Agam and Navneet. So last series we had an eventful expiry where we saw the VIX was almost at the higher end band of close to around 27, 28, which was hovering on account of the election outcome. Now this series, the last June series, looks like it is taking some kind of a breather where we have seen a muted rollovers and a muted closing for, when I talk about Nifty, it has just ended marginal negative by around close to 1% odd. And if you look at the open interest, it's the base for the July series is starting close to around 1 crore 92 lakh shares.
Right.
And the previous expiry also, the base was at the similar level of 1 crore 92 lakh shares. So I don't see much of a change in terms of the price and open interest. It has been remained quite muted.
Right.
However, if you look at the rollovers percentage, the percentage is slightly interesting where we are seeing 80% rollovers happening for the Nifty for the July, towards the July series compared to 71% what we had seen the previous series.
Right.
This is mainly on account of the last couple of days where we have seen a good traction in the open interest built in for the next and the far series.
Sure.
So there were not much rollovers which were happening, but there were some fresh additions which were seen to the start of the July and the August series.
Right.
Hence we are seeing a slightly better off consolidation taking some support around 11,600 odd band. This was the supportive action where the gap had started during the poll outcome during the election time.
Absolutely.
So the entire June series market has struggled to cross the 12,000 mark, but somewhere it has taken this, respected the support of this gap up opening which we had seen earlier. So I believe the coming few days will be important to watch out how the open interest pans out from here on. Technically, 11,800 will act as a momentum support, and on the upside, 11,960 is where the key resistance is seen. So unless and until this range is not violated, we may see the open interest again hovering in the band of 1.8 to 2.2 crore odd shares.
I mean, interestingly, this was the worst series so far in 2019, though the losses were pretty marginal. Just about Nifty was down 100 points, and I think we need to also keep in mind that we're trading around the higher end of the range as well. We did touch all-time high levels for the June series, but I was looking at the roll cost, and that's on the higher side, which usually indicates rolling over of more of long positions because you tend to pay higher premium. But was it also due to the dividend impact?
Yes, definitely. So if you see last series, it was mainly to do with the earnings which were coming for the quarter, and most of the Nifty 50 stocks had some kind of a dividends payout. So definitely we have seen during the earning times the dividend, the rollover cost always remains on the lower side.
Right.
So if you see the rollover cost last series was close to around 0.27%. Compared to this time, it's around 0.55%. So definitely it will look like an increase. But if I have to compare the rollover cost with the April series, the April series rollover cost was close to around 0.67% to what it is at 0.5%. So that's where the dividend will play a critical role, and it will look on the higher side.